What is inflation? What does it have to do with an ordinary man? There might be a lot of questions that you have regarding this, and we are here to answer them all. Hey guys, welcome back to another exciting video by Economics YouTube channel. Today, we will be telling you everything you need to know about inflation and its effect on us. But before we begin, quickly smash the subscribe button and hit the bell icon so we can move further. Inflation implies you need to pay more for similar labor and products. This can help you as you pay inflation or resource inflation, for example, in lodging or stocks, off the one chance that you own the resources before the costs rise. In any case, if your pay doesn't stay up with inflation, your purchasing power decays. After some time, inflation expands your average cost for basic items. If the inflation rate is sufficiently high, it harms the economy. The impact relies upon the kind of inflation. For instance, strolling inflation is 3% to 10% per year. It warms up economic growth excessively fast. Individuals purchase an overabundance to stay away from the upcoming greater costs. Providers can't keep up. All the more critically, neither can compensation. Subsequently, regular labor and products are valued out of a great many people's span. Inflation doesn't similarly influence everything. For instance, gas costs could twofold while your home loses esteem. That is a thing that occurred during the monetary emergency of 2008. Home costs collapsed, falling 22%. In the interim, inflation happened in oil costs. They arrived at an unequaled high of $128 a barrel in 2008. Since oil costs impact gas costs, the expense of gas transcended $3.50 a gallon in certain pieces of the United States. Driving to work turned out to be significantly more costly and surprisingly unpleasant when numerous specialists were stressed over keeping their positions. Some of the time, inflation is useful for the economy. At the point when it's gentle, inflation has a solid result. When individuals begin to anticipate inflation, they spend now instead of later because they realize costs will be higher later on. Buyer spending drives economic growth. Truth be told, the Federal Reserve sets an inflation target. It's anything but a solid center inflation pace of 2%, which produces out the results of food and energy prices. The National Bank needs a little inflation, which additionally persuades costs to keep rising. Inflation can be awful for your retirement arranging. Your objective sum should continue to ascend to pay for a similar personal satisfaction. As such, your reserve funds will purchase less over the long haul. To be ready for inflation during your retirement, save more than you might suspect you will require. Start saving straight away to profit however much you can from building interest. Observing inflation is significant on the off chance that you hold bonds or treasury notes. These fixed-pay resources pay a similar sum every year. At the point when inflation rises faster than the profit from these resources, they become less important. Individuals race to sell them, further deteriorating their worth. At the point when that occurs, the U.S. government is compelled to offer higher treasury respects, sell them by any stretch of the imagination. Accordingly, most home loan financing costs increment. Higher rates bring down the worth of your investments. They additionally increment the expense for the central legislature of financing the U.S. obligation. The interest in the national obligation rises. The extra spending costs should be counterbalanced by a cut in the optional financing plan or an expansion in charges. In any case, further deficiency spending will happen. Those are contractionary monetary approaches that slow economic growth, which converts into a lower expectation for everyday life. Inflation that arrives at half a month is called hyperinflation. It happens when the public authority basically prints cash regardless of the inflation rate. It occurred in Germany during the 1920s and Zimbabwe during the 2000s. Hyperinflation could prompt a U.S. economic breakdown. If inflation at any point approaches hyperinflation, your best protection is to purchase gold or any money that isn't fixed to the dollar. On the off chance that you have a fixed-rate contract, you'll profit with inflation because the worth of your month-to-month contract installments will diminish over the long haul. Your installment may be a fixed $1,500 each month for a very long time. In any case, since the worth of that $1,500 diminishes over that 30-year time frame, it will feel like you're saving money. That is, accepting your pay has developed alongside the pace of inflation. Putting resources into the financial exchange is another approach to profit with inflation. On the off chance that you have a fixed-rate contract, you'll profit with inflation because the worth of your month-to-month contract installments will diminish over the long haul. Your installment may be a fixed $1,500 each month for a very long time. In any case, since the worth of that $1,500 diminishes over that 30-year time frame, it will feel like you're saving money. That is, accepting your pay has developed alongside the pace of inflation. Putting resources into the financial exchange is another approach to profit with inflation. If inflation expands at the cost of a gadget consistently, the worth of the organization that makes the gadgets additionally is probably going to build each year. So holding stock in that organization is a decent method to shield yourself from being contrarily affected by inflation. Not every person profits by inflation, however. Anybody conveying obligation with a variable financing cost will probably see their base installments increment as inflation rises. This is the case regularly with high Visa obligations. However, it likewise applies to variable rate contracts. Inflation additionally adversely impacts the individuals who are in the market to purchase a house. The costs of homes are probably going to increase directly alongside the pace of inflation. Is it true that you are putting something aside for your retirement, for your kids' schooling, for some other long-haul objective? Provided that this is true, you'll need to know what inflation can mean for your investment funds. Inflation is the increment in the cost of items over the long run. Inflation rates have varied throughout the long term. Now and then, inflation runs high, and on different occasions, it is not really observable. The momentary changes aren't the main problem. The main problem is the impact of long-haul inflation. Over the long haul, inflation dissolves the buying influence of your pay in abundance. This implies that even as you save and contribute, your amassed abundance purchases less and less, just with the simple entry of time. Also, the individuals who put off saving and contributing are affected much more. The impacts of inflation can't be denied, yet there are approaches to battle them. You should probably claim a few investments whose potential return surpasses the inflation rate. A portfolio that acquires 2% when inflation is 3% really loses buying power every year. Even though the previous exhibition is no assurance of future outcomes, stocks truly have given higher, long-haul, all-out returns than cash choices or bonds. In any case, that potential for more significant yields accompanies the more serious danger of instability and potential for misfortune. You can lose part or the entirety of the cash you put your resources into a stock. On account of that unpredictability, corporate shares may not be suitable for cash you rely on to be accessible temporarily. You'll have to consider whether you have the monetary and passionate capacity to brave those good and bad times as you seek better yields. Diversifying your portfolio, spending your assets across various investments that may respond differently to market conditions, is one way to help manage inflation risk. However, diversification does not guarantee a profit or protect against a loss. It is a method used to help manage investment risk. So that's all for this video. I hope now you have a better idea about the impact of inflation in our lives. Thanks for watching. Like this video and stay subscribed, and stay tuned to watch more of such kind. See you soon.